What if I told you that classic methods of market analysis are bait for those who don't understand how smart money works? Smart money are the ones who really drive the market, leaving traces on the charts that most traders simply don't notice. Today, we'll break down how to see those marks and learn how to read the market like the real professionals do it. Most traders fail because they don't understand how the market is designed to be manipulated and follow patterns that trap them. Smart money is a strategy that allows you to follow big money instead of going against it. In this video, we will reveal the basics of this strategy. After this video, you'll be able to recognize when the big players are gaining ground, how they shake out small traders, and, most importantly, how to start to trade with the advantage on your side. But before we start exposing all the secrets, support this video with a like and subscribe to the channel. Smart money is not just money, it's capital managed by the big players in the market. Central banks, hedge funds, and institutional investors like Bank of America, Goldman Sachs, and Barclays. These organizations move the market the way they want and leave trails behind them that you can learn to see. Average traders try to predict the market using classic figures and indicators, but the smart money plays a different game. They purposely create movements, manipulating the price to gather liquidity and move the market in the right direction. It's as if the big players put chess pieces on the board, knowing several moves ahead of time how the game will unfold. We, retail traders, often do not even realize that we participate in this game according to their rules. Today, I'm going to show you how to learn how to see these moves in advance and follow the smart money instead of become a victim of it. To understand why the smart money strategy is so effective, it's important to realize that the financial market is all about supply and demand, and of course liquidity. But unlike retail traders who follow charts, trends, and try to guess movements, smart money creates those movements themselves. Now, coming back to the smart money strategy, let's look at how we can stop being victimized by these manipulations and start following big capital. After all, central banks, institutional investors, and large funds have access to huge amounts of money, and using these resources, they can manipulate price movements by using the liquidity of retail traders to their advantage. Liquidity is a key element of a smart money strategy. Liquidity is money that is concentrated in the form of stop losses and pending orders placed by retail traders. These areas represent targets for the big players because that is where the funds are located that they can utilize. There are zones in the market where the stops of a large number of traders have accumulated. For example, these zones can often be found near equal highs, EQH, or near significant structural points. The smart money sees these zones and seeks to capture them in order to free the market from excess positions and gain positions of their own. When the big players see the accumulated stop orders, they create a sharp move, grabbing liquidity and taking that money. This is the liquidity grab. Our task as smart money traders is not to enter at such moments on emotions, but to wait until the market clears and only then start looking for entry points. Just imagine that the price is approaching an important liquidity zone, such as equal highs, EQH. Many traders expect price to reverse in this zone and place their stop orders just above these highs. The big players, seeing all these accumulated stops, intentionally push the price up to collect liquidity and activate orders. Once the liquidity is grabbed, the price reverses and starts to move in the opposite direction. Those who rush to enter the market at these levels are knocked out, while the big players continue their move with the accumulated liquidity. Our task is to wait for this process to complete and only then enter the trade. Now let's break down the basic elements of the strategy to understand how and where to follow the big players. 1. Market structure. The first element is market structure. The market can be in one of three states: upward trend, when price is making higher highs and lows; downward trend, when the price makes lower lows and highs; consolidation, a period when the price is locked in a narrow range and large players are accumulating or spreading their positions. Determining the market structure helps you understand the direction the smart money will take. 2. Order blocks. Order blocks are areas where large players have accumulated their positions. When price returns to an order block and shows signs of reversal, it can be a great entry point. A bullish order block is a zone from which a strong upward movement has started. A bearish order block is a zone from which a downward movement has started. 3. Imbalance. Imbalances are areas on the chart where supply or demand was significantly higher than opposing orders, resulting in a sharp price movement. These areas pull the price back and can be used as targets or entry points. Now let's understand how to apply this strategy. Step 1. Determine the market structure on the higher time frames. Start by analyzing the higher time frames to determine the global market direction. This will give you an idea of the possible directions to trade. Step 2. Find liquidity zones. Look at where other traders' stop orders might be. These zones are your targets for finding good entry opportunities. Step 3. Wait for a liquidity grab and look for an entry point. Don't rush to enter the market. Wait for the big players to complete a liquidity grab and only then look for a trade opportunity and what to do if you find the smart money strategy too complicated. If you want to learn more about what liquidity withdrawal is and how it works, watch our next video. And for that, subscribe to the channel and click on the bell. That way you definitely won't miss a new installment of this topic.